Hi everyone, welcome back to the audit and attestation class. In this class of audit and attestation of specific matter that requires special audit consideration, we'll be covering a special topic, an entity's ability to continue as a going concern and the additional procedure as an auditor we need to perform to evaluate the going concern. And then we do some practice question also. Let's dive into for more details.
Last topic, an entity's ability to continue as a going concern. So, so far we have covered like 5 major topics. One is like opening balance testing, investment in security, inventory and inventory held by others, accounting estimate, litigation claim and assessment. Now we are jumping on to the last topic, which is an entity ability to continue as a going concern, right? So
Yes, sir.
here,
So in opening balances, will we be studying like how to classify assets and liabilities, or it's almost the same?
no, it is all same thing. So opening balance testing, like we discussed, is being required in the circumstances when there is no previously audit done by anyone.
Right.
You are first time being appointed as an auditor, or there is a change in auditor and you have
Change in
been
auditor.
appointed as a new auditor. Yeah. So in those case of scenario, opening balance testing is being required.
Okay. So these are like so specific, these specific procedures, these 6 topics basically which we are discussing today. So is
Yes.
it when we estimate, we do the risk assessment and identify to be the high risk areas, or it's on a general audit as well? We will be doing these.
Yeah, generally like high risk areas will come from these specific audit consideration area and require special auditor attention.
Okay.
Like accounting estimates are generally high risk areas kind of things. Or going concern, if there is a going concern, then it would be have pervasive impact, right? Like if you feel like company may not continue for next 12 months, then
Then
you
it
need
would
to
be a
make all
question.
the account on a liquidation basis. So you need to value all assets at net realizable value and all liability at net realizable value, and you need to make all the adjustment in the entire balance sheet and profit and loss account. So it have pervasive impact on the overall financial statement if you conclude that company may not continue to go in concern.
Okay. Because sir, in chapter 2, when we were going through the chapter 2, so we saw like sales process and purchase process are heavily tested in our exams. So in that we completely checked how sales process is in the complete flow chart. So from that perspective, also I was thinking like in to understand like in chapter 4, it is the most test. What are the most tested items?
Yes, you can say so. Right. So
Yes.
now coming to the entity ability to continue as a going concern. What is going concern and when it is an issue of going concern? We discuss.
So
So going concern,
yeah.
sir, it
Yeah,
is
yes.
basically like when the company would be able to, operate within, the upcoming next 12 months. So whether they have the sufficient, balances and sufficient funds in order to operate within the next 12 months.
Yeah, Sanchit, you want to add something?
Yes, so we see like the foreseeable future for the company, which is next 1 year, 12 months. So if its company will be able to work on the next coming months on a foreseeable future or not. If there's a question on their workingness operations, so it is a question on going concern.
What are the indicator that as an auditor which bring your attention that management may not be able to continue their operation for next 12 months?
The losses, sudden increase in loss, or like their main supplier is not able to deliver the products, and the change in the geopolitical area. External factors is basically the geopolitical area, like Ukraine, or recent example recently was between there, and then The components over there we had put as a going concern or going concern.
Yeah. Anyone else? Pranjali, Gurmehar, Rahul.
So major shift in like technology. So their product might have become outdated for the audience. So basically a part of external factor.
Yeah, that's very true.
Yeah, so we discussed this Kodak and Fuji.
Yeah, Kodak, Fuji, Nokia, right? Good. So I know like we have already touched base this topic going concern. So you have good idea. So we can quickly run through on the going concern assumptions and risk indicator. And then we'll be discussing in detail about like as an auditor, what all procedure you need to perform to test those going concern assumption. And when you have risk on going concern assumption, what all things you need to be considerate of. Right. So like we all know, like going concern, we generally evaluate the financial statement are prepared on a going concern assumption basis, unless there is a substantial doubt about the entity ability to continue as a going concern for a reasonable period of time. And that reasonable period of time is 1 year from the report release date. Right, the day you are signing the financial statement, the day you are issuing the audit report, from that date in next 12 months, do you foresee like management will continue their operation or not? Right. Examples of the indicator which may result into impact of the going concern assumption. First is recurring loss, accumulated losses more than share capital, right? Negative net worth, or maybe significant change in technologies, like especially in like laptop market, mobile market, application market, electronic market, right? Change in regulatory policy or any new laws or regulation adversely impact, maybe like tobacco industry, liquor industry, oil and gas industry, drug industry, medical industry, right? Significant change in economic condition like war zone, climate impact. So those may be like indicator of the going concern assumption issue for the management as well as to the auditor, which you need to keep in mind. ASC 205 provide the guidance by defining the substantial doubt about the entity ability to continue as a going concern exists when condition and event considered in aggregate indicate that it is probable that the entity will unable to meet the obligation as they become due within 1 year after the date of financial statement have been issued. Right? Objective of the auditor relating to the entity ability to continue as a going concern and the implication of the auditor report are: first, test the reasonableness of the management use of going concern basis of accounting. First thing and foremost important thing is for us as an auditor need to evaluate the reasonableness of the using of going concern assumption by the management in preparation of the financial statement. Second is concluding based on the audit evidence obtained whether there is a substantial doubt about the entity ability to continue as a going concern or not. Third is evaluate and report on the possible financial statement effect if there is any. So how do you evaluate the going concern at the planning stage? This we discussed in detail in chapter 3 as well during the risk assessment process. So kind of reiteration or repetition of the same, which is AUC 315, understanding the entity and its environment and assess the risk of material misstatement, require the auditor to gain an understanding of the management evaluation of whether there are condition or event raise substantial doubt about entity ability to continue as a going concern for a reasonable period of time. Management evaluation in making the judgment about the going concern include the degree of uncertainty, complexity, and size of the operation, right? Degree of which it is affected by the external factor. Like for example, most of your operation are based on like import or maybe export, how external economic environment are impacting your business, right? Nature and condition of the business. If the management has performed an evaluation, the auditor should discuss the evaluation of the management and determine whether the management has identified the specific condition or event that may result into risk of going concern. The auditor independent evaluation should cover the same period required for the financial reporting purpose and consider whether the management evaluation include all relevant assertion or information or not. Next is auditor should inquire management regarding its knowledge of the condition or event that is beyond the period of the management evaluation may result into any impact on the going concern assumption, maybe in prior period or maybe in future forecast. Last one is auditor should remain alert throughout the audit. So going concern assumption is not something which you are testing at the planning stage or evaluating at the conclusion stage. This is something throughout the journey of your audit you need to keep in mind. There might be a possible event that may occur during the audit or maybe at the time of conclusion of the audit that may result into impact the going concern assumption. For example, you have done the audit for January to December period, and in January period when you are doing finalization of the audit and there is a fire happen in the plant, and in future management do not have insurance policy unfortunately and may not be able to continue. So in that case of scenario, your overall financial statement which you are giving for the December financial year, even though the fire has happened in January, you need to consider the impact on the going concern assumption. Make sense? Yes, no?
Yes, sir.
Okay.
Yes, sir.
Additional procedure to evaluate the going concern. First is inquiry with the management whether the condition or event exists that raise the substantial doubt about the entity ability to continue as a going concern for a reasonable period of time. Second is obtaining sufficient and appropriate audit evidence to conclude the appropriateness of management continue to as a going concern. What all things you need to do? Request the management to make the evaluation when management has not yet performed any evaluation. If management has performed the evaluation, it's good. If they have not performed the evaluation, ask them to perform the evaluation on the going concern. Second is evaluate the effectiveness of the implementation of management plan. So for example, the company is running in loss and you can say indicator that in future management may not go long or the company may not go long for the next 12 months. But management on the other side says we are currently in loss, but we are a startup. And in future, we have plans to bring new investor on board, new customer on board. We are in talks with the investor, we are in talk with the customer, and they have given you very flourish plans for the future. Right? In that case of scenario, you need to evaluate the effectiveness of the implementation of those plans as well to mitigate the relevant condition and events. Third is consider any additional fact or information become available since the management has made its evaluation. So three things you need to keep in mind. First, you need to request the management to make the evaluation, right? If there is any doubt, and then evaluate those assumptions which management has taken and ensure in future the actualization of those assumptions. And third, consider any additional information, maybe market information, industry information, to conclude on the going concern assumption. When management plan financial support by third party, right? For example, the parent company has given a support to the subsidiary who is running in loss. In that case of scenario, you need to obtain the confirmation from those third party who are given the commitment and support to the company which is in loss. Make sense? For example, let's say there's XYZ company in USA and they have a subsidiary ABC Limited in India. ABC Limited in India is recurringly incurring loss and they have negative net worth. Right? In that case of scenario, if you are an auditor of ABC Limited in India, you'll be concluding that the company may not continue as a going concern because they have recurring losses and negative net worth. But in that case of scenario, if you get the parent support letter, that parent is agreed to add additional capital or infuse additional capital to ensure the continuity of the engagement in India, continuity of the company in India. In that case of scenario, you can consider the going concern assumption is good. Failure to obtain the written evidence constitute lack of sufficient and appropriate evidence. In this situation, auditor should conclude that management plans are insufficient to evaluate the determination of substantial doubt about the going concern, and then you need to request management to prepare the financial statement on a liquidation basis. If they do not prepare the financial statement on a liquidation basis, it's a gap issue and it is a pervasive issue, so you'll be issuing an adverse opinion. If the auditor believes that substantial doubt exists, then request the following written representation to the management. First is management plans. Once again. Yeah, management plans that are intended to mitigate the adverse effect of the condition or event that indicates substantial doubt. Second is financial statement disclose all matters of the management is aware of that relevant to the entity ability to continue as a going concern. So these two things, specific disclosure, you'll be taking in the management representation letter. Coming to the auditor conclusion. Auditor is not required to obtain sufficient and appropriate audit evidence when going concern as issue is not relevant. So you'll be taking only the relevant or sufficient appropriate evidence when there is an issue to the going concern assumption. If there is no issue, then you are not required to dig unnecessarily. Make sense? Everyone with me?
Yes, sir.
Yeah, just 7 more minutes. We are about to finish. Don't worry. We have just 2 pages, 2 more pages. Second is, auditor is required to conclude whether substantial doubt exists to evaluate the possible financial statement effect and required disclosure under the financial statement reporting requirement. If the adequate disclosure when required is not made, then auditor should express either qualified opinion or adverse opinion. So first, you do not require to take much documentation like sufficient and appropriate documentation if there is no issue. You will be required to take the appropriate and sufficient documentation only and only when there is an issue exists. Second is, auditor is required to conclude when there is a substantial doubt. It's mandatory requirement for you to conclude when there is an issue of going concern. So in that case of scenario, you need to conclude whether the management has taken appropriate disclosure or not. If the management has taken appropriate disclosure, then it is fine. If not, then you'll be expressing qualified opinion or adverse opinion as it is a gap issue. Third is, if the auditor conclude that management issue a going concern basis of accounting is inappropriate, then auditor should express an adverse opinion because it has pervasive impact. If the auditor conclude that management use going concern basis of accounting is appropriate, however, substantial doubt about the entity ability to continue as a going concern for a reasonable period of time, the auditor should include in the emphasis of matter. So here there are 3 scenarios given. First scenario is when there is no issue. In that case, you are not required to take any additional documentation. Second case, when there is an issue. So if the issue is having persuasive impact, then you will be giving adverse opinion. If the material impact, then you will be giving a qualified opinion. Third thing is, entity has appropriate plan. Entity, like you conclude that there is a significant doubt on the entity ability to continue as a going concern, but they gain the comfort letter or they gain the support letter from the parent company, right? In that case of scenario, it is always good to disclose in the emphasis of matter paragraph that you got the support letter from the parent company, otherwise like management has going concern issue. The auditor should not use conditional language concerning the existence of substantial doubt of the entity's ability to continue as a going concern. So whenever like auditor is giving any qualification or emphasis of matter paragraph or adverse opinion, the language should be clearly communicate that. It should not be conditional language. Last thing is communication to those charged with governance. So for going concern issue, it is mandatorily required for an auditor to communicate to those charged with governance about the nature and event that is resulting into going concern issue, auditor consideration of the management plan, and the going concern assumption is appropriate or not, and implication of the same in the audit report. These four things are being required to be communicated to those charged with governance. And last and most important thing is documentation. Work not documented, work not. Are you guys with me?
Done.
Okay, I'm glad you still remember. Work not documented, work not
Work
done.
not done.
So it is important to document the entire work. So auditor should document all of the following: condition and event that auditor believe exist may result into going concern issue, right? Second thing is the element that the management plan to overcome with those issue. Third is auditor procedure they have performed. Fourth is auditor conclusion, right? These all things you need to document properly in your audit work paper. Last thing is conclusion.
सर ये notes दोबारा भेज देना.
I'm just doing this small formatting things.
Okay.
Right? Nothing much. Okay, last two questions of the day, and then we are good for today. And we have covered a lot, all 6 things. I didn't expect like we will be covering all 6 things today, but we are glad we have covered all these 6 things. Question.
Yes. When I checked the notes, I was also not expecting we will be able to.
Yeah. So hopefully tomorrow we'll finish off this chapter. Okay, so practice question concerning an entity's ability to continue as a going concern, which of the following most likely would be considered mitigating condition? So call of the question is, what is the mitigating condition? Plan to increase the ownership equity. That means like parent is planning to infuse additional capital. Second is positive comment about the company from industry analyst. Third is recent strong showing in the stock market. Fourth is a decreased unemployment rate in the entity industry. So which one will be a mitigating factor that you will not go with the going concern issue?
Capital infusion, sir. So plan to increase ownership equity.
So first ही होगा.
Why not second, third?
Remaining ones all are external factors.
Yeah.
But once we analyze whether the entity is able to continue, then only the internal efforts which entity is making will substantiate that point. That's why first is right.
Right.
Yeah. So like most sometime in the question you will see like all the answers are right, but you need to select the best right answer. Right? Industry is supporting, employment rate is reducing, stock market is increasing. Those are external factors, but core thing is like additional infusion of capital for your sustainability, right?
Right.
Next question is, which of the following would usually cause an accountant to modify his or her standard compilation or review report if properly disclosed in the financial statement? One is uncertainty about entity ability to continue as a going concern. Second is inconsistency in the application of accounting principle. What is the question? Which of the following would usually cause an accountant to modify his or her standard compilation or review report, not the audit report?
So neither of the two would be the correct answer.
Why?
So it's because it's a compilation report and a review report, it's not an audit report. We are not concerned about the going concern and whether there is inconsistency in application of accounting principles. Had it been audit, then maybe both would have been relevant.
Yeah. How about others? Sanchit, Gurmehar, Kashish.
Yes,
Yes, sir. In case of audit, then we will take it as both. But in case of compilation or review, neither of the situations were agreed upon.
Cool. Okay, so you all are good.